Hello again, everybody. It's your boy, Chicago Sean. Welcome. It's Tuesday, January 26th, 2021. Markets are going up. What else is new, right? Well, been kind of a quiet trading day today. I'll put up my screen here for you. You can see in the lower right-hand corner, I've only done 3 trades, all credits. And what I did is when the market opened this morning, we gapped a little bit higher. I had some short calls that were in the money. So I rolled up, you can see here in this trade, I rolled up my 383 calls, rolled them out to 385. I had to go a couple expiration series out, brought in a 54-cent credit times 2. And then I also had to roll out the 84 calls that expire tomorrow. Rolled those out to Friday, one strike up for 14-cent credit. And then after that, I was already I was trying to target $200 in cash flow, which, by the way, that's an update from the last videos. Last week I was trying to bring in $100 every day. Well, it was slowly working, not dramatically so, but it was working last week. So I decided to kick it up a little bit of a notch this week, and I'm going to go targeting $200, a minimum of $200 cash flow every day. So after I made these first 2 adjustments, rolling these calls, I only needed, maybe another $80 to let me hit my target. So instead of doing a full delta neutral spread where I sell the at the money call and put and buy a protective call and put further out, my positional delta was leaning pretty heavily short, not heavily short, but it was leaning short at that time. I'm sorry, I was leaning long. Excuse me, I was leaning long at that time. So I thought, you know what, I'll just sell a call spread. I'll sell an at the money call, which at that time was 386. Covered it with a 389 call. That was the approximately 25 delta call. That brought in a 102. And then as you can see here, if you look at my trades, this is the net credit I brought in today, 224 minus commission and fees. So let's just say I brought in $218 of total net credit. That's the goal, wanting to be cash flow positive every day. And so the position as it looks now, you can see here's the position grid. You can see all my short options clustered around here. Long puts down there, long calls up there. Market's sitting right with this red flag, this red and green flag is alternating. Market's sitting right around here. So we're right in the sweet spot of where we're gonna, where we'd love the market to just sit down and be quiet and let theta work its magic. That's where we want to be. But as you can see, if the market rips higher, we're in a pretty good spot. And you know what? One thing I want to bring up here, let's bring this up. I'm going to bring this little spreadsheet over here, something I'm working on. So you can see this on my screen. I think you can see that on my screen. Yes, you can. Okay. So I built this little spreadsheet so I could kind of track how much risk I have on both sides of my position. So let me maybe just move this right here, maybe a little better. So yeah, this graph here on Tastyworks gives me a nice indication. But here I can really single out what my exposure is on each side. So on the puts, you can see here where I got $2,200 in maximum put exposure. So if the market were to totally crash from here, right, I'm on the hook to cover all my short puts. And then I have the protective puts to protect me. But at most, I'm going to have to pay out $2,200 in a crash scenario. Okay. Well, in that case, so far, you can see here, I've got this net cash collected. I've brought in $1,390. So if we have a stock market crash, well, then I'm going to be a net loser because I've only brought in $1,390 and I got to pay out $2,200 to cover these spreads. So I'll be a net loser. We're not talking big money here. Only $700 or $800, no big deal. On the flip side, on the call side, if the market were to scream higher from here, I mean, we're talking a massive gap and go, whatever the situation may be. If that were to happen, worst case scenario for me is I've got these short strikes here to 384 to 385, 386, and I got some longs protecting me there. If I had to exercise all of them, worst case scenario to me, the net cost I'd have to pay out is $1,200. Well, in that scenario, where I brought in $1,390, least the worst case for me is I walk away with $190 positive, right? So on the upside, I'm more or less guaranteed a profit, which is good. I still need some work to do to protect myself on a downside move. Then I also do like the worst case scenario. I don't even know how this, well, it could happen. Anything could happen in the market. But if for some reason the market were to have a huge gap down, where all my all my put options got expired or exercised against me, and then the next day the market screamed higher and all my calls got exercised against me, I guess I would have to pay out $2,200 on the put side and $1,200 on the call side, for a total max exposure of $3,400, leaving me with a negative $2,000 cash flow. The likelihood of that happening, I mean, that's the blackest of black swan situations, right? I mean, a massive gap in two different directions in 2 consecutive days. I don't see that happening. So really, I'm just trying to keep either of these numbers, within range. And so right now, my max exposure is on the put side. If the market goes down, that's where I get hurt the most for now. But tomorrow, tomorrow will be expiration day. So let's go here and. So tomorrow, January 27th, is when a lot of these options will expire. If the market sits right here and does absolutely nothing, I'll be able to close all these short calls and puts for really, really cheap, which would be great. That's ideal. And then I'll try to bring in some credits selling the January 29 calls and puts. I want to end the day tomorrow with a positive cash flow of at least $200. That's the goal. That's the goal every day this week, is positive cash flow, $200. All right, well, everybody, that's where I'm at right now. I hope you found that instructive, enlightening. I gave you more questions and answers. If that's the case, great. Hit me up with questions. Hit me on Twitter. Hit me on the YouTube channel. Again, I'm still figuring this out. I'm not saying this is the best strategy in the world. It's a strategy that versions of this strategy have worked for me in the past. So I'm still refining it and tweaking it. I'm always refining and always tweaking. And so I'm doing these videos just to kind of share my process with you and share my evolution in this process with you, so that hopefully we can all benefit. That's really the goal here. So thanks for hanging out. Have a happy trading day for tomorrow. I mean, trading day today is almost over. So good luck tomorrow, and be well. Take care, everybody.